Welcome back to Fast Market here on the Schwab Network. It's time for a cash tag segment. For that, we're going to bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
All right, so we're talking Planet Fitness. This stock has just been pummeled lately. I think I saw some pullbacks in expected number of new outlets for the fitness center operator at this point. But what kind of data are you seeing? Because this stock's been hammered so far this year.
It has. There's a lot of concern. I mean, they just they just replaced, or actually they're replacing their CEO. He left, and there's a lot of concerns about the reduced equipment placement forecast, the escalating construction costs. They're having trouble securing new locations. Of course, member retention is also a big one. So we've seen this stock down significantly. In fact, if you can go back 2 years, it's about half of what it was 2 years ago. So now it's right around $50 and really struggling. Of course, you've also got the Ozempic scare, if you will. I mean, if people have the choice between taking a drug versus going and working out every day, I think a lot of people would choose taking the drug if it does produce the same results. I don't think it does personally, but we'll see. That doesn't matter. It matters what people think. And so when we look at the data, we have to say, are people talking about Planet Fitness more or less? Are the people going to the website more or less? And so when we first look at mentions, we can actually see that obviously we're in off peak right now. However, the year-over-year comparison is still very valid. So we're actually up about 7% on a year-over-year basis on mentions, just people talking about the brand and going to the gym and things like that. And so that bodes well for the the New Year's resolutions crowd that are going to all join up on January 1st and 2nd coming up, and then we'll see how long they stay. But the fact that we're up on a year-over-year basis, even though it's downtime right now, is very positive. And the same goes for web traffic. Actually, people going to planetfitness.com is up about 4% on a year-over-year basis, which is actually an improvement from a quarter ago. A quarter ago, that number was -7. So that's a significant improvement. So a quarter ago, if you would have asked me, I would have said, well, we're starting to trend in the wrong direction. But actually now we're trending in the right direction. So they've turned things around. And you can see here the mention count. This is the number of people talking about the brand versus the stock price. We've got a pretty good divergent opportunity. If the stock had just been flat over the last 3 or 4 months, I wouldn't be too excited about it. I'd say, yeah, that's about in line with what we're seeing. However, we're seeing pretty good weakness here in the stock. But we don't see that weakness in the consumer demand, either on social or on web. And so there's a divergence opportunity. I think that you can even go back and look at the last quarter earnings. You can see that they did well. You can see the consumer web visits, people going to the website, and you can see we're an off peak, but we're up again about 4% on a year-over-year basis. So the fact that the data it's not strong, but it's definitely not weak. And the stock is absolutely sold off. I'd say this is a bit of a divergence opportunity. This is not us, pounding the table saying, the consumer demand is up off the charts and the stock's down. That would be a great opportunity. We're just saying that I think this selling is a little bit too much. It's oversold at this point. They had a good earnings report last quarter. I mean, they had a surge in demand. They've added 300,000 members up to over 18 million now. Same store sales are up almost 9%, and they added 26 gyms. So they're on the right track, but I think there's a lot of fear baked in with the CEO turmoil and possibly some Ozempic, fear, I guess, that we're seeing happen. But as we talked about before, we're not seeing it in the data, at least yet. So to me, this is a good buying opportunity.
Hey, Landon, on the one hand, I think the bulls could say basically with a company like Planet Fitness and the price point that they offer for membership here, that if we do continue to see the consumer get hit, we know we got student loan repayment, we know we've got credit card debt going up, we got higher interest rates, they're getting hit there. It seems like they could be a company that benefits from a trade down if they wanted to maintain their membership. But holistically, in terms of gym memberships, if we go into a recession, is this something that you witness that consumers are likely to just cut altogether? Or is this something that they consider kind of one of those staples? Is it a more cyclical or more staple? Or how are consumers around their gym membership? Are they easy to drop it?
Yeah, so I think that for most people, it's going to be more cyclical. I think that most people would, if things are getting tight and they see that $10 or $15 charge hitting every month, they're going to say, you know what, I haven't been in a little while and I can go jogging if I need to, something like that, or I'll just eat less. There's going to be your core audience, the hardcore people that are working out all the time, and it's a staple. They're not getting rid of it. But yeah, I do think that there is some, I guess, a recession could hurt their consumer base. It is a pretty low price point, though. I mean, it is a pretty cheap product, and it's always there if you want to go. So it's just nice to have in your back pocket. But yeah, if you've got that consumer base where $10 a month, $15 a month is noticeable, then it could be something that goes. But I don't think that we're going to get to that point in the economy. I mean, you're talking about a broader conversation there, but I think there is some elasticity in the demand with the economy, but I don't see that happening over the next 3 to 6 months.
Landon, when you talk about competitors in this space, you mentioned the low cost entry point for the monthly membership. It's almost like to Nathan's point, what I think he was trying to get at was, hey, will people just cut this? It's 10, 11, whatever it is a month, dollars a month. It doesn't seem like a lot, but people are getting constrained. As far as competition goes and happiness levels with Planet Fitness, what kind of data are you seeing on that?
Sure. So we've got them pretty steady at about 60%. So that's been the number that we've seen them at for a while. We don't have any big changes. So, I think that what we've seen with consumer happiness being so steady is that their offering is their offering, right? I mean, they don't screw up. The gyms are always clean, well taken care of, good staff. And they don't have any huge advances that would make people off the charts happy. So maybe that could be an opportunity for them to offer, more classes, better equipment, whatever it might be, to get that number up. But we're seeing it pretty steady, and so otherwise I wouldn't mention it. It's not something that would drive me to be bullish or bearish on the stock. It's just flat at 60%.
Flat at 60%. Well, 95% are franchised, over 2,000 outlets there. So they got a little bit of scale there, but I think that franchisees, they want to keep their place clean, and that's probably one of the sticking points for a lot of people that go there. All right, great stuff as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data on Planet Fitness. So Nate, the last example trade we looked